Well, it depends if you're looking at the short run or the long run. In the short run, I think the fact that we have some clarity and probably going to avoid the hard Brexit means we have better economic growth. We get lower uncertainty, stronger business confidence. That is, of course, if Parliament passes the deal tomorrow. So for 2 years, expect the economy to do well. In the long run, this deal foresees a free trade agreement between the UK and its biggest market. It's far less deep and integrated than being inside the single market. This will lower UK potential growth. Just to give you some numbers, inside the EU, the UK grows at around 2.1% at a stable level. In this deal, probably 1.7 is potential growth, so we're probably shaving 0.4 off there.
How do you know, and this is what the Brexiteers would be asking now, so how do you know that actually UK growth, with all of the trade deals it's going to be able to strike globally, without the constraint of EU rules, without the constraint of EU regulations, how do you actually know that we're going to go to 1.7 from 2.1? You can't possibly say, can you?
Well, it's a good question. Now, what we are modelling is all else being equal. That is, nothing changes UK domestic policy, the UK's relationship with non-EU countries. Right. You just change
yours is a worst case scenario in many ways, i.e. it's as we are, but with a free trade agreement with the EU, yeah?
If the UK were to pursue better domestic economic policies and have good trade deals with non-EU countries, growth could be better. The big key for us is actually immigration. It's not trade or investment. The UK will still do well with the EU trading and investing, even in this FTA. But if the UK sets policies which reduce inward immigration by 2/3, which is what Theresa May's policy would have done, that takes a lot of economic growth. Inward immigration has probably added about 1/6 to all economic growth since the 1990s. So a lot depends on the deal, but a lot depends on what Mr. Johnson and his colleagues do with immigration over the next few years.
At Berenberg, you done your work on points-based system, because we heard it a lot from the Home Secretary. We heard it a lot from Priti Patel telling us about how a points-based system will bring the best talent to the United Kingdom. Do you have your concerns about that, do you?
Well, I don't see an economic problem with the system that the UK has with the EU. Generally speaking, EU immigrants into the UK are better educated and the rate of economic participation is actually a little higher. So for the most part, the UK is bringing in better talent than the average UK worker anyway. Perhaps you can improve this a little with a points system, but if I don't see a market failure as an economist, I wouldn't recommend a policy solution.
And of course, the other part of this is the government, we know quite clearly, wants a general election. And we've quite clearly seen the manifesto. On 2 occasions I've seen it. One when I was here early in the week for the Queen's speech, and most latterly when I was up in Manchester listening to minister after minister, Secretary of State after Secretary of State saying, this is what we're going to do after a general election. There's a lot of money being pumped into the economy and into productivity as well. So surely that would be a bonus.
It's very likely that if Boris Johnson gets this deal through on Saturday, he would win then a general election and go for a fiscal stimulus. In our view, we probably can get growth above 2% for a while in 2020 if we get a deal and then a fiscal stimulus. But fiscal policy mainly, even when it's on the investment side, boosts cyclical demand rather than long-term supply side growth. So you get a situation where the economy does well, we throw some money at the economy, but then we just return to the potential growth rate, which is a function of our relationship with the rest of the world.
Now, I specifically asked you questions about if the government gets a deal, and I've done that on purpose because I think actually there is so much conjecture about what could happen if we don't get a deal. I almost feel that there's too many routes to go down. So let me stick with this vein, if you don't mind, as well. And what happens to the EU after Britain gets a deal, if Britain gets a deal, after October 31st as well? Because already we're seeing jockeying from the Germans about their net contribution to the EU as well. Will they need extra stimulus in Europe to offset the fact that you don't have the British contribution?
Well, of course, you're going to have to make up the money somehow. The 27 have a very difficult conversation to make. In the short run, expect actually the EU to benefit a little bit. The UK is a big trading partner for all the major economies in the EU, so better economic growth in the UK is a plus for the EU. Just to kind of do some rough numbers, the EU earns about 3% of its GDP exporting to the UK. UK earns about 12% of its GDP exporting to the EU. So proportionally, we're about 4 times more exposed. So the benefit in the near term will be bigger for us than the EU. In the long run, I wouldn't expect much change to EU potential growth.
And just
Hi, I'm Joanna Bersecci and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.